What are the tax implications of selling company stock? When I'm asked the question about what should one of my clients sell around their company stock, the answer is always, well, it depends upon what it is you own and how long you've owned it. If you're thinking about looking at a variety of different holdings, vesting periods from RSUs, then you want to look at, well, which has the highest cost to them rather than, well, which ones did I receive first? Because if through time the stock has gone up in price, then the early stock units that converted to stock, you have the lowest cost basis. And so selling those would generate more in tax gain, taxable income, tax gains, capital gains taxes than would be the case for selling ones that had more recently converted from RSUs into stock. However, at the same time, let's say you've been waiting a while and the stock has been kind of bouncing around, and then suddenly there's a major event that causes the price of your stock to go way up. Well, then all of a sudden, the ones that were quite recent could be short term. They could have vested in less than 1 year. And then if you were to sell, well, then that's short-term capital gains rather than long-term capital gains. And under current federal tax rules, short-term capital gains are taxed as income and could be at a 35%, tax burden, whereas the maximum rate for long-term capital gains is 20% from the federal government. So it depends upon the exact nature of, well, what's the cost basis and what's the holding period to then determine which are the right tranches or portions of company stock to sell.